Well, welcome back to another Market Open live stream. We're slowly getting the office put back. They'll have this amazing amount of hope that at some point markets are going to go positive again. Who knows? Maybe we'll see some beautiful positivity after the Federal Reserve meeting, which is this week. And that's why we've got coupon code BOON link down below for the best pricing on the programs on building your long-term wealth. So Federal Reserve meeting this week, it's obviously going to be a big deal. Not only is it going to be a big deal, but I'm pretty sure nobody's going to want to be touching stocks before the Federal Reserve meeting, because that's literally what happened last time. People think the Federal Reserve has a shot of doing solid rug pull at every single meeting. So basically buying pressure goes to zero right before the Federal Reserve meetings. This is really important to know. So think about this. If this week and next week, you've got 4 of probably the most insane catalysts that we've had since March, you may as well wait before you buy to make some of these moves. Well, or this is the perfect opportunity, right? But at least that's what markets generally feel is, well, I may as well wait for some of these catalysts. So what are those big catalysts? Well, the first one is the FOMC meeting, the Federal Reserve. We're going to see whether they raise rates, 50 basis points, 75, full rug pull, what kind of comment, half rug pull, who knows, right? They keep freaking flip-flopping. They change their mind like crazy. In December, they're like, we're going to go aggressive. Then you get January, they're like, it's okay. Like, we're going to take things easy. Then we get March, and they're like, hey, we're just going to do 25 basis points. We're good. We're going to take it easy. We're going to be consistent. The very next day after they go 25 and everybody's happy, they're like, 50 basis points isn't off the table. And then all of April, they start complaining about how basically they want to do a larger hike and kind of front load the hikes, which is a total flip-flop from what they told us previously, especially in February when Jerome Powell was testifying before Congress, telling us, well, we're going to do, consistent hikes like we did in 2004. And then, of course, last week, Jay Powell's like, yeah, but this time's different, so we're going to change it. So constantly freaking changing his mind. You can't blame people for being like, you know what, I'm gonna just wait to see what he does, because what he says, I don't trust anymore. Can't blame him. Well, can't blame the people who are not trusting J Powell. That's obviously coming up May 4th. Which is going to be very interesting. Then we've got CPI data coming up next week. I believe that's May 12th. I'll double check that right now. Then we have Victory Day, May 9th, which will be very interesting because that is when we expect that Russia will pretend to declare some form of victory over Ukraine and potentially, hopefully, carve out certain regions of Ukraine and then pull everything back and just say, all right, we won these areas, we're good, mission accomplished, we're out of here. Who knows? Maybe, maybe not. That does mean things could get worse before that date as they kind of try to finalize this. They're already trying to implement the ruble as a currency in certain areas in eastern Ukraine and to try to show, look, people are now using the ruble here. I think it's all part of like big Victory Day messaging, which is, oh, look, we denazified the eastern region. In fact, here, look at photos of the Russian flag flying, people using the Russian currency and speaking Russian and this, that, or blah, 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 blah. Whatever. So that's obviously a big catalyst. Then you've got this massive catalyst coming up of also the unemployment rate, which surveys expect the unemployment rate will fall from 3.6% to 3.5%. That comes out on May 6th, which is Friday. So a lot of things coming up. You've got, you've got the Federal Reserve on the 4th, unemployment on Friday, CPI end of next week, Thursday. Then you've got the Victory Day on the 9th. These are some insane freaking catalysts. So we'll see exactly how this all evolves. But in the meantime, all of this madness has set us up for a record, folks. Take a look at this beautiful chart here. If you follow me on Twitter at RealMeatKevin, you've already seen this beautiful chart. But look at this, folks. You should be proud that you are a part of this. You are now a part of the worst start to the year for global average indices. Global, every single average, market index is down for the last 2 decades. And you're part of it. So congratulations, you're winning. You have the honor of declaring that you are part of this. Anyway, okay, so we are going to get some ISM data this morning. We're going to get manufacturing data, prices paid data, new orders, employment data. That's all going to come out at 7 a.m. We'll get some manufacturing information right about 6:45. It's going to be our manufacturing PMI. We have tomorrow, we're going to get the JOLTS for job openings. It's expected to also be over 11.2 million job openings. So lots of job openings. Speaking of job openings, it's crazy, but I think we have like 600 applications that we're going through. We're really like now hiring very specific like professionals, like people with like finance degrees and accounting degrees and MBAs and investment banking. It's really cool. So it's really exciting. It's really, fun things coming ahead for like action plans. Not such fun things coming ahead, obviously, for the stock market, but these are the painful times where I personally like put your head down. I like, and this is not advice. It's just sort of like what I tell myself. Construe it however you may. It's not financial advice for you because I don't know your situation. Even if I did, I couldn't tell you everything. But anyway, I like just every time you get paid, it's like, all right, I guess I'm just buying a little bit more. It's kind of like DCAing in on your pay cycle. Now, I highly encourage staying out of margin. Highly, highly encourage staying out of margin. It's a terrible idea. I'm actually slightly in margin because I decided to actually pay all my taxes. I was kind of thinking about just kicking the can down the road and like, taking a little bit of like their penalty. It's like a cheap loan. But no, I didn't do that. So anyway, but I'll be fine. I'll be fine because I've got the piggy bank of real estate. It's like a little piggy bank you can break, and then you pay up your margin. Have extra cash to go buy the dip in the stock market, right? So that's kind of what I've been doing. I still got properties left to sell, though. It's as usual, things take a little longer than expected, but that's okay. We will get through it. All right, what other news do we have? Well, Warren Buffett bought $600 billion worth of Apple in March. I think his average price was around $159. I bought a big chunk, like about 1.5 mil of Apple at like 152, but I already dumped it at like 169. I didn't actually mean to trade it, but I did. So anyway, Berkshire's meeting. I think it's worth us doing a little recap of Berkshire's meeting in case you have not yet heard some of the things that went down at Berkshire's meeting. So let's go ahead and do that. Do a little Berkshire recap, and then after the Berkshire recap, we'll dive in and look at some of the sticks and some of the other notable things going on. Specifically, a lot of fear right now that the 10-year Treasury is really just going to explode higher than a level that we've ever seen before. I personally believe this to be highly true. It's one of the reasons I'm very nervous about the real estate market in the short term, and what I'm really working towards doing. And listen closely if you're an accredited investor, okay? They're really now is really the time, in my opinion, in the real estate market to start kind of like prepping cash, and so that way, whether or not something occurs in the real estate market, which I think is more likely than not, you're prepared. Back in like 2006 and 2007, a lot of mismanaged funds or funds with misaligned incentives were still buying the top of the freaking market, like total freaking morons. And then when the rug got pulled, they had no money to go shopping at the bottom. Instead, they went bankrupt because they were overexposed and over leveraged at the top. Very, very, very dangerous. So, stay tuned. All right, now a little bit of the Buffett talk. Okay, so Buffett. I can't believe I almost said Bluffett. All right, let's talk about Warren Buffett. Buffett blames the massive stimulus during the pandemic as a key reason that we are seeing inflation now. And I think this is absolutely obvious. He says, look, when you print loads of money, money is going to be worth less, separate from worthless, but worth less. Okay, that being said, Buffett had great things to say about J-Pow. He said in his book, J-Pow is a hero. I don't think a lot of people in the stock market right now would agree that J-Pow is a hero, but to some degree, it's important to remember that J-Pow kind of stopped a lot of the liquidity printing that was happening, probably around the summer of 2020, but it's Congress that just kept going and more stimulus. So the monetary side of stimulus, like for example, the Main Street lending program or some of the other bailout programs, that they were really underused by the Fed. The Fed was actually surprised about it. They're like, oh wow, we're barely even using these programs. It was more like, I think they only bought like 80 billion in bonds or something like that, corporate bonds, or if that. It was just sort of like the sentiment that, oh yeah, the Fed's going to come bail us out. But it was really Congress that's like, anyway. Munger also talked about risks he's willing to take on investing in Chinese stocks. And I thought this was interesting because personally, I'm like, I ain't not going near the Chinese stocks because Chinese consumers like, hell no. We saving money. We're not spending it. He says, the reason that I invested in China is I get so much better companies at much lower prices, and I'm willing to take a little bit more risk to get into better companies with lower prices. Other people might reach the opposite conclusion, and everybody's worried about China now, or more worried about China now than they were worried about more than they were 50 years ago. Okay, they're more worried today than they were 50 years ago. And see, that's really interesting because really what he's saying is, hey, like, yeah, we realize there are a lot of risks investing in China, but it's creating this wonderful, buy the dip opportunity essentially in Chinese markets. Now, I personally don't like the idea of buying ADRs because you have the delisting risk from the SEC. But hey, if you had a way to get direct access to Chinese stocks, it's not a terrible argument that, hey, sure, short term, maybe China's in recession. We're getting misleading data, right? But maybe it's an opportunity to buy the dip. So very, very interesting. Buffett says that he looks at Berkshire as a painting. And it's ultimate, and it's really an unlimited painting in size. That he's got this ever-expanding canvas, kind of like the universe, and he gets to paint wherever he wants. That was kind of interesting, and also somewhat inspiring. But anyway, Buffett said Berkshire has been increasing its stake in Activision. This is a merger arbitrage bet that Microsoft. Remember, Microsoft is buying Activision Blizzard. Some folks rumor that the reason Microsoft is buying Activision is in part to get the CEO out of Activision and try to like clean house a little bit. I think that happens a lot at companies. Like Microsoft doesn't necessarily really want Activision, but it's like, okay, well, we can like basically buy a wedge deal because it's mismanaged, get rid of the management, and then profit. Kind of, in my opinion, like what you're seeing with Twitter. TBD. Anyway. So Berkshire in Q4 purchased $1 billion of Activision. They suggest they had no prior knowledge of Microsoft plans to buy the company. And that may be true, but when you read between the lines, there could be prior knowledge that somebody was going to buy Activision. No prior knowledge it was going to be Microsoft, but I knew somebody was going to buy it. Well, if it was anybody but Warren Buffett, people would be all up in that yin yang trying to figure out about insider trading. Anyway, in January, Microsoft obviously announced their intentions to buy Activision for $95 a share. It actually closed for $75.60 on Friday, so who knows? But then again, the market price is in the risk that these deals won't actually happen, right? This is the same reason why Twitter is selling for less than $54.20. Buffett says they own about 9.5% of Activision. Let's see what else he has. Going back a little bit to inflation, he mentioned that inflation swindles the bond investor who keeps their cash and the person who keeps their cash under a mattress and the poor folks. It pretty much swindles everyone. The inflation is really, really bad. And we've kind of seen that dialogue change with Jerome Powell as well. Initially it was inflation is transitory. Then it's like, well, it's still kind of transitory, but it's less transitory. It's just lasting longer. And now it's like, oh gosh, we got to deal with inflation. Charlie Munger had a nice little slam on Robinhood. He called it an example of a good idea that has gone grossly overdone. Munger said that hidden kickbacks of that business model are quite frankly, quote, disgusting. And he says that Robinhood is, quote, unraveling and that bot is getting justice. I mean, this is like such a horrible slam on poor Vlad, which Vlad's kind of gone dark. I'm like, hey, yo, Vlad, when are we going to do another interview? I think the world wants to hear from you. Now, a lot of people, when I say that, they're like, oh, Kevin, why would you interview him? I don't know. I kind of like interviewing controversial people because I think it's very interesting. I wonder what it must be like being Vlad right now. Anyway, so at the beginning of the Berkshire meeting, there was talk about that if something is not a productive asset, it doesn't produce anything, then Buffett won't buy it. And this is when he really took the opportunity to slam cryptocurrencies. He talked about whether it goes up or down in the next year or 5 years or 10 years. He has no idea. But one thing he knows for sure is that it doesn't produce anything. And he wouldn't even buy all the Bitcoin in the world if it was $25. Okay. So and let's see here. He also goes on to say, I don't think we've ever made a decision where either one of us has either said or been thinking we should buy or sell based on what the market is going to do, or for that matter, on what the economy is going to do. We don't know. And this was also really inspiring because it's like there's so much to look at, and it's just like, oh my gosh, it's like it puts you in like a dizzy. And so this is actually one of the reasons I've gone so heavy on just buying Tesla, because I'm like, boy, oh boy, I read a report the other day that, and I've got a few other companies as well, but I read a report the other day that this has been the hardest market to time in 50 years. And so like, even if you time some parts right, like, boy, oh boy, like what's around the next corner is just insane. Anyway, so for me, I'm just like, all right, well, where's the next opportunity, I guess, to buy my three faves, you know? So anyway, Charlie Munger had some words about these calls about removing Buffett as chairperson of Berkshire because Buffett's old, blah, blah, blah. And he said it's like Odysseus would come back from winning the Battle of Troy and so forth. And some guy would say, I don't like the way you were holding your spear when you won the battle. Like, in other words, talking about like how ridiculous it is. You know, Buffett's helping win the game, and people calling for his removal are just obscene. Buffett talked about his struggle of finding good businesses to invest in, and he's they're absolutely searching for deals, but they have to be sizable deals. He says, we'll pay any price, climb any hills to find businesses, but we actually prefer when they fall into our lap. I kind of think that's great. And it reiterates this idea of like having cash on the side and being ready, being prepared to be able to make acquisitions rather than being all in and being on margin, which is just a complete disaster. Buffett, kind of goes back to his confidence on the Fed a little bit, talked about short-term volatility that's fueled by gambling mentality. This is something that they do their best to absolutely avoid. And they also bought the dip quite a bit in Q1. Big stake in Occidental Petroleum, Chevron. They increased their stakes in, and they bought multiple other stocks. And really, they're buying these as opposed to buying treasuries, which makes sense because I think treasuries are just getting reamed. So anyway, today he talked about the fact that Berkshire will likely always be cash rich because he thinks that they are actually better than the banks in extending credit lines to companies in need. And really what you do in that case is you're like, sure, we'll give you a credit line in return for some equity, some cheap equity. And then, of course, from the start of 1965 to the end of 2021, end of 2021, worth noting. I mean, things have, well, although Berkshire has been holding up quite well, it's actually been doing very well. So anyway, from 65 to the end of 2021, the per share market value of Berkshire Hathaway had an annual compounded return of 20.1%. That's nearly double the S&P's return of 10.5%, including dividends. Really incredible. So this gives you a little bit of an update on what went down with Warren Buffett and Berkshire Hathaway this weekend. So at the beginning of this live stream, we talked a lot about the catalysts that are coming. And I think it's so critical that we pay attention and realize the 10-year treasury is really likely to ream us. Now, a lot of folks, and I see this all the time on Twitter, they're like, there's no way the upper bound for the 10-year is 3%. Now, I've been since January talking about the fact that we're likely to see the 10-year treasury pop 10%, pop 3% and hit 3%, but probably go above it. And my expectation is we're more likely to see the 10-year treasury sit around 3.5%. Well, now we finally got a little bit of data on this in terms of market expectations. Bloomberg ran a market pulse survey, and here's what it says. Of the 807 participants, the projected 10-year yield will climb above 3.15%, peaking only in the third quarter of 2022, while 41% of those surveyed believe the 10-year treasury will actually hit 3.4%, up from 2.9% where we are now. And then a lot of like anecdotal quotes about how there's a chance we could go to 3.6. Some people think it'll be 3.4, blah, 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 blah. But anyway, the expectation is these yields are going to pop off a little bit more, which is really bad for real estate and mortgage rates. Because if you think about it, if we get a 3.5% treasury, a 10-year treasury, which mortgage rates tend to align with the 10-year treasury, we're going to see 6% mortgage rates, maybe even like 6.5%. I mean, some people think it'll go as high as 8%. You know, consumer sentiment survey people think that mortgage rates are going to be 8% in like 2 years. A lot of people, though, have the impression that even as mortgage rates go up, like certain areas will just be able to hold their value because sellers aren't selling. And that may be true. If sellers don't end up selling, this real estate market's not going anywhere. You know, it's just going to keep going, which is insane. I don't believe that to be true. I think you're going to get more panic selling this summer. Oh, well. You know, one thing's for sure. No matter what happens, I'm not leaving. I'm always here for y'all. I know sometimes it goes from live streams to videos. Sometimes I make changes to my portfolio, but I'm still here. I didn't leave. I might change what I'm wearing, but I ain't leaving. All right. So the 10-2 has steepened a little bit, which is actually a good thing. It's a sign that maybe the market is trying to price in a little bit of confidence potentially for the Federal Reserve in that they're doing the right thing to finally be aggressive on inflation. 10-2 spread right now is at 24.6 basis points. Obviously, we want to be as high above zero as possible, and we're still historically very, very low. Let's look at the 5-year break even. Yeah, where do you want to send a resume? Like the best thing to do is send a 2-minute video to me at kevin@meetkevin.com. And really what you should say is what your work experience is. Really, really important you have work experience. If you don't work experience, it's probably just not going to work because we've got like, we're going to have probably going to have like 8 to 10 people in this like really startup setting where we don't really know exactly what everybody's going to do yet. And so somebody with work experience is going to know how to fit in. They're going to know how to communicate properly. They're going to know, how to express their concerns or their suggestions. We're not going to have time to teach everyone. So that's why we've kind of changed a little bit, what we're looking for. But yeah, like a video, like, hey, here's what I'm good at. Here are my thoughts on how I can help you. Whatever. Okay. 5-year break-even rate has ticked down again a little bit. This is really good, and again is also signaling at least some market confidence that the Federal Reserve is going to have some power in handling this inflationary issue. Now, I'll go ahead and pull this up because I want you to see this. It's been volatile, as the stock market has been extremely volatile as well. But I want you to pay attention to the trend here on the 5-year break-even because I think it's really important. Remember, the 5-year break-even is your tool for the market's expectations of inflation. And so if you... I doubt CPI consensus is out yet, but I'll look in a sec. So if you look at this, we have this rise at the bottom left of the chart, which was about May of 2021. So right here is May 21 for what it's worth. It's very interesting to note that in the summer of 2021, while I was running for the governor position, we actually had very low inflation expectations, and that inflation fears actually went down. But Delta screwed that, right? Delta came in here, and then you had Omicron over here, and then you had war over here. So it's like that constant reinflating of inflation fears that really made something that was transitory, which it was. I mean, look at it. It went down. Like our expectations went down. Inflation stabilized. It was right. Like the Fed was right the first time. It just doesn't look like they were right because when you look, it's like, oh, crap. Well, Delta ruined it, Omicron ruined it, and war ruined it, right? But the good news is that right now, if we just kind of look over here, look at this trend. Let's zoom up a little bit. There we go. Look at this trend that we've got here. We're hitting lower lows And these are since March, right? Since the beginning of March. So we're hitting lower lows and we're capping out at lower highs. This is not a very, clear trend right here, but you could see here that, hold on, let me just remove myself. There you go. So here are your lower lows, and here's sort of our downtrend at the peaks over here, which is really good. So I like seeing this. Last week we temporarily saw a little bit of this pop off over here, but we're still trending down. And this is something that I really am paying attention to because, again, we need these inflation expectations to go down. If these inflation expectations keep going up, then the Federal Reserve has to rug pull us. Now, some folks say, well, Kevin, we're already getting rug pulled. Yeah, well, to some degree, they have changed their mind many times. But I personally don't see it as a rug pull. I was really concerned that we were going to get Paul Volcker, that we were going to see like a 2% hike, so a 200 basis point hike. And this was back in January, right? As the wage price spiral took hold and we saw inflation expectations get unanchored. This is a chart that tells you that inflation expectations are anchored. And inflation expectations are actually quite transitory to an event that occurs. Again, I'm not trying to sound like insensitive here, but look, after 2020 COVID, inflation expectations went down. After Delta, inflation expectations went down. Omicron, we really only had like a little short spike over here. This is the end of December and January. That's when you had your Omicron spike, and then obviously war has been just a complete disaster. That's been worse than Delta and Omicron combined, right? But it is again trending down. So this is very, very, very good. I'm optimistic about this. I can't be blind though and say that, we're good, margin it up, YOLO. It's, I don't know. I mean, honestly, like if you bought some call options right now on QQQ and you thought, hey, the market was going to zoom after the FOMC meeting, it might not be very that might be very, very lucrative, or you'll lose all your money. Remember that when it comes to shorter term call options, you'll either kill it or you'll lose 100%. I have done that. But I also don't play with, out of the money short-term call options with more than 1% of my portfolio because that'd be crazy. So anyway, CPI month-over-month expectation. Oh, it's actually May 11th. CPI month-over-month expectation is actually only 0.2%. Oh my gosh. Excluding food and energy is 0.4%. That's interesting. Okay. Wow. That kind of implies a drop in food and energy month over month. Huh. All right. Well, we'll see. Because if inflation comes in soft May 11th and that people relax after the Fed and we get Victory Day, this market's going to zoom in May. We'll see. Or it'll crash. I don't know. But I'm pretty optimistic that we're going to have some positive moves. So, all right. Stefano wants you all to know that Kevin never reads the chat. Real Estate Mindset says, you motivate me to push myself harder. I recently found success on YouTube and owe a ton of that to you. That's awesome. Congratulations. Ministry of Truth. Yes, we are getting a Ministry of Truth by somebody who sings on TikTok and, is all in on Steele dossier and Hunter Biden's laptop. Actually, she tried burying that story. Anyway, we're not trying to get political. Oh, we got a bell.
And a potential ban of Russian energy out of the EU. Some reports they may be imminent. Maybe some proposals tomorrow.
We have to see how much is oil, how much is natural gas. I will tell you this, India's buying that stuff. Other markets are buying it at considerable discount. But it does matter to me that I would have thought that oil would be down.
All right, let's see what happens here. So QQQ is actually turning a little positive right now. Look, these are some great freaking prices, okay? Like, I don't know about you, but some of these things just look like great prices. Let's take a look here. So Activision Blizzard, Where is Activision Blizzard? $77. Well, isn't that deal going through at $95? Like, dude, that's a better deal than the Twitter one. Yeah, dude, that's a 19% discount right now. Holy moly. I'll write that one down. Activision, 19% discount. Very interesting. And then you've got, wow, Beachbody's $1.60. Penny stock. Let's see here. Lowe's, $1.99 for Lowe's. Interesting. UWM mortgage companies, only $3.70. Starbucks, $75. That thing's always been over $100. Well, that's not true, but before the pandemic and then right after the pandemic. Cheesecake, $37. Simon Property Group, $118. Simon Property Group, it was such a steal during the depths of the pandemic. Costco, $534. Wow, look at it. I was so tempted to buy Costco, and I'm like, the problem with Costco is it keeps skyrocketing. I can't buy something that keeps skyrocketing. And so it touched $600. And look at that. Now it's back. It's already down about 10% off of that. Actually, a little bit more than 10%. That's quite interesting. It is green today, though. Let's see. Like, what's Tesla today? Isn't it like 850 or something like that? Let's see here. Tesla. Yeah, look at that. 858. Nicely below that 880 line here. Let's see. Spirit Airlines, $21. What the heck happened with Spirit? Let's find out here. See if we got because the other airlines have been killing it. So let's try to figure it out. Well, you're not saving money on Spirit stock. I guess you are if you're a buyer. All right, so what do we get this morning? Spirit Airlines board says JetBlue offer not superior. Oh, that's why. They are reiterating their support for merging with Frontier instead of JetBlue. Remember, JetBlue really wanted to buy them at a premium, probably honestly to get the jets. Like, JetBlue needs more jets so they could charge people more. Well, fly more people. Anyway, okay, so that explains why Spirit's having a little bit of a disaster here. Because they ran after the announcement, the offer announcement. Amazon down again about 2%, along with Rivian right there at about 2%. Matterport, $5.63. Affirm's at $28. Roku, $91. Tattooed Chef under $8, $7.87. Etsy, $91. Etsy's just another one where I'm just like, oh my gosh, hold on. Let's do a quick little look together here, shall we? Because remember, the credit card companies were not seeing a slowdown in e-com spend, but everybody's just pooping on e-com because it's a consumer discretionary. And it's fine. I mean, I've been pooping on e-com and consumer discretionary for 3 months. That's why the only e-com or consumer discretionary I own is Tesla, but that's because I think it's a more of a premium consumer discretionary. Anyway, EPS of $4 expected for Etsy for 2022 at 93 bucks divided by $3.94 roughly. It's selling for 23.6 times 2022 earnings. That's not so horrible. I made a video about Visa last week. We talked a lot about Visa. Where were you? Somebody's asking about Visa. And then the growth rate for Etsy is expected to be about, I would say, an average of about, for the next 4 years, probably about 17%. And then going to slow down probably thereafter. But that's actually very good. I mean, you're near a 1 on the peg there. Let's see. Lemonade. Yeah, Lemonade. Boy, oh boy. What happened? What happened here? So, Lemonade, $20.71. Tesla sinking a little bit, down 1.9%. And how's how are indices doing? Oh, we had a little bit of that buy the dip right there at open, but slightly rotating down now. Again, not surprising given the catalyst that we have coming up over the next 2 weeks for us to see some softness here. Makes me wonder, though, what happened to Blue Apron? Oh, some pre-market pump and dumping, huh? Hate that kind of stuff. It's, I guess, an easy way for some people to make money. Pump and dump. That's bad. That's just bad. DocuSign. Where's DocuSign? Well, how do they do it? I'm pretty sure they're still losing money, though. Let me look here. At least they're not a fraud like Teladoc. Oh, I said it. Oh, is that defamatory? Well, it has to do with their impairment that they didn't explain. So it's true. But then again, I guess we don't know if that's fraudulent. It's fishy. Yeah, no. DocuSign still does not have profitability. Maybe next year they'll be profitable at $2 of EPS, which that's next year. So you still got another year to go through this crap. What about Pins? Because Pins actually decent earnings, but one of the things that I'm concerned about with Pinterest is you have them complaining a lot about Google and the search engines because they're getting less impressions from search now. So they're monetizing their users better, but if you don't get new users, it's a problem. But they do have 50 cents of earnings this year. So you're literally paying 10 times 2022 earnings. No, sorry, that's not true. 50 cents. Sorry, I did the math wrong. No, you're still paying 40 times. Oh, yeah, no, okay, that makes a lot more sense. Because they're $20 divided by 54 cents. 37x. That's too expensive for Pins. See, at that point, 37 times 2022. I'd rather be buying Etsy at 23.6 times 2022. Similar projected growth rates, but not if you read that earnings call, the disaster. Now, Redfin's gonna be underweight or under fire or whatever because of how much real estate they hold in the event that there's a slowdown in the real estate market. QQQ now almost down a full %. Let's go. Give us better discounts. Sell. Thank you so much, Enrique. Look forward to seeing you in the courses. They're all about building long-term wealth. I really think that a big one that almost all of you all in the stock market might be thinking to yourself like, real estate ain't for me. Honestly, you go through that course and you'll see how instead of like hoping you make money, you can guarantee yourself that you're making money when you go buy deals in real estate if you do it the right way. So that's why a lot of people bundle the Stocks and Psychology and Money Group and the real estate investing course. What's also cool with the real estate investing course is when people find a deal and they submit it, they're like, hey, I wrote an offer on this or whatever. We go through it in the course member live streams. Usually we do one a day. And we can sort of give pointers too, like do this, not that in a house, which is kind of cool. Some deals I love. Some deals I'm like, why are you buying this? Like, run away. Some people skip the lectures. Let's see here. What is the worst stock market you've participated in? Yeah, well, I mean, I still think the absolute bloodiest with the rapidness that we've seen was March of 2020. That was a rapid sell-off. It was very short-lived, though. It was very different from 2007 and 8, where you really had this long-term decline. You had a lot of bear market rallies, which is a lot more similar to what we're seeing now. So, I guess it depends on the time frame. Like March felt a lot worse because you're just seeing the indices all go down 7 or 8% a day. Now it feels like a slow bleed out of the entire market. Kind of wild. It's a lot more time involvement. Anywho, hey, T-Doc's actually up a little bit. So, all right, let's see what the suits are saying. EXP is at EXP. What? $13? Holy crap. EXPI. Yeah, and right now I only own 3 stocks. Goog, Trade Desk, and Tesla. In case anyone's wondering. But anyway, EXP. They are projecting 62 cents of earnings. It's a better deal than Pinterest. 13.54 divided by 0.62. Yeah, that's 22 times. And this company is projecting to grow at 30 to 40%. Holy crap. That's very interesting. So they're selling for 21x 20. I mean, they're selling for a PEG ratio of 0.5. Wow. That's fascinating. That is very fascinating. Okay. Yeah, I don't know anything about Finico, whatever you're asking about there. Okay, so oh wow, look at Newegg. This was a classic like momentum story here. Look at that insanity. You know, it'd also be kind of interesting to see how this one's doing in terms of what they bring to the bottom line. Newegg. So Newegg lasts 12 months. Why is this so complicated to read? I have no idea. There are no projections. I have no projections for Newegg. Never mind. Fine then. Fine. All right. So what else here? Embraer. That's another one that's growing. This is a Brazilian aircraft manufacturer. And yeah, EPS is a little on the low side, though. Actually, it's quite a bit on the low side. So that's less exciting than some of the other ops. I mean, it's 12 cents. Yeah, I mean, that's wow, that's shocking. That's super low. Okay, then. Visa 209. I like them at 180. They'll probably be back there. So, okay. Tattooed Chef, MP Materials. Wow, MP's just like lost almost half here in just this last like month. Because they were at 65, I think, there for a while. That's quite wild, especially as a materials play, to see MP Materials rotate like that. Palantir, $10. Harley had some good earnings. Harley Davidson. Oh, look at that. Tesla just went positive. Crazy, crazy market. Adobe is another one that I find interesting, but you know, let me pull up Adobe here. So Adobe, you're looking at 13.68 times on, you know, $400 basically. $13.66. See, that's still selling for 29 times gross, or 20 something in real estate, 29 times gross net earnings, EPS. And they're only growing at like 14%. So you're paying like a 2 peg over here. I'm much less interested in that. Cloudflare at $89. I mean, Cloudflare is very expensive, but if you want to get into cybersecurity, $89. I mean, I think the low on that thing is like $84 here recently. Yeah, but don't do like a PE ratio calc on them because it's just went from infinite to a lot. Yeah. Roku at $95. Remember, Roku's to some degree an advertising play. Problem though with Roku is they're expected to lose money in 2022 and 3. I can't bring myself to buy money losing companies right now. I'd rather buy like Shopify, like some of the e-com stores. In fact, Shop just reported. It'd be interesting to kind of go through there. Didn't they? Let me see. Shopify. Let's see. Earnings. Oh, no. Shopify reports this week, May 5. I'm thinking of a different company. But anyway, they're projecting for 2022 earnings of about $2.84. Oh, hold on. Let's see what they're complaining about.
On the CME HQ with breaking news, our April final read on the S&P Global Manufacturing PMI, formerly known as the market PMIs, not to be confused with ISM PMIs coming out at the top of the hour, expecting 59.7. Well, the final read moves down a bit from 59.7 to 59.2. But it is still a decent read, and it is the highest read since 60.7 in September.
Okay, I just have to say, never mind on Shopify. They're expecting, $3 to $4 of earnings. That's terrible for a $428 stock. I mean, you're paying 150 times for this company at 30% growth. I mean, you're paying like a 5 peg. This is terrible. Never mind. Like Etsy's a better deal. Looking at that sort of like growth to valuation metric. That's insane. Wow. Okay. Yeah. No thanks. I mean, Facebook's probably a much better deal. Let's look at Facebook for the gigs. And I don't even really like Facebook. I mean, Mark Zuckerberg thinks I'm going to buy expensive clothing in the metaverse. I listened to him say that. And I'm like, you're out of your freaking mind. If you think I'm buying expensive clothing in the metaverse, get ready for naked metaverse. So Facebook's only selling for 14.6 times 2022. But the growth is TBD, right? I mean, it may be 8% this year, 14, 15% in the next years if they pull anything off with the metaverse. I don't know. It's certainly a better valuation than some of these others, but the growth is the question. Oh, another good one to look at might be Square. Let's see, because they've come down so much in like PayPal. Although PayPal's last earnings call was just a crap show. It was so bad. So Google at 22.87. Ooh, Google's only going for 18.4 times 2022 earnings. Ooh, I really like that. Especially, but then again, this year, they're actually expecting, that's not so good. They're expecting to contract a little bit and then get back to about 15% growth. So you're still spending a little bit of a multiple there on the growth. Okay, let's see here. Problem with Roblox, I'm pretty sure, is they don't make money. And again, if the company doesn't make money, they're just like super risky in this market. That's not to say the stock can't go up. It's just to say it's super risky because this market is like anything with a negative on that EPS, sell. Look at that. What a volatile market. We went negative like almost 1% there on the QQQ. Now we're actually going positive again here. Quite fascinating. Steel Dynamic. Yeah, they're rumored to be the cyber truck steel supplier. I imagine that Steel Dynamic is, just one of. Oh, what? Wow. Holy crap. This is very interesting. So that they're expecting some massive freaking contract here in 2022. I really have to understand this company because it says it's supposed to grow at 20% this year, but next year, negative 20%, negative 7% thereafter, flat in 2025. But they've got $19 of earnings right now on a company that's trading for like $80, which is like a 4 in terms of price to earnings. But the growth is like, some major contracting coming up here in the next few years. I mean, it's not a growth company, right? I'd really have to know what the HE double hockey sticks is going on at that company to even remotely want to touch it. I do wonder if Dave & Buster's is back to profitable. Let's see here. Play Dave & Buster's. Oh, let's also. Oh yeah, okay. So Dave & Buster's. It's actually not bad. Dave & Buster's expecting $3.46 right now of earnings. Dave & Buster's. Excuse me. Dave & Buster's, that means, is selling for roughly 13x 2022. And going forward, the growth model projects a good boost this year. But after that, you're probably selling for about, or you're probably going about 10% growth. So you're really doing a peg of about 1 there, which is not terrible. That's not quite terrible. Very interesting. Okay, cool. So that's Dave & Buster's. Very thinly traded, though. You could see that. I mean, how many shares are we trading here? Look at that. Some of these we're trading like 139 shares in a minute. I mean, that's like nothing. Very, very, very thinly traded. AMD. Yeah, you know, it actually would be interesting to kind of compare AMD to Nvidia a little bit. Ooh, look at that. AMD turning a little red. All right, let's see what we got here. So AMD. Okay, so AMD's got a 4 on EPS for 2022. 85 divided by 4. That puts AMD at about 21 times. And if we look at their growth, this year they've got a big growth expected, you know, somewhere around 45%. But it's probably going to average out to about 12% later. So I'm going to write that down. Pretty sure Nvidia kicks their butt on this. Net margin, by the way, at AMD is about 25%. Pretty sure Nvidia kills them on this. Yeah, see, Nvidia has a net margin of about 41%. That's like way better. Really, really, really good. Dude, Stefano, bro, I can't read every freaking message, and I've read like 6 of yours. Chill out, bro. Okay, so, So it's like when I'm in the middle of talking, people are trying to talk over me. It's like, shut the F up. You can leave your question there. And if I see it, I'll see it. Anyway, Nvidia. So Nvidia is 5.69%, or sorry, dollars for EPS. So they're selling for 184 divided by 5.69. They're selling for about 32 times, but their margin's so much better. They're still a little pricey for the market right now, the way it is. 32.3 times. I sold my Nvidia, sadly, but also expecting about 30% this year, and then probably going to average out to what? Maybe 12% also in terms of growth. So big year this year, but the next years thereafter relax a little bit. So let's see here. Okay. So we answered the, okay, we took care of this. All right. So markets like all over the place. I mean, I've seen Tesla like flip between green and red like probably 6 times now. It's pretty wild. Let's see here. Okay, the next thing that we want to pay attention to comes out in about 6 minutes. In about 6 minutes, we're going to get multiple numbers. So what we're going to get, I'll read it out to you. Okay, so we got the global manufacturing, which came in at a little bit of a miss. But now we're going to get construction spending, ISM manufacturing, ISM prices paid. That's going to be a big one. New orders and employment. So I'm kind of excited about that. Dave Cross, you're funny. All right. Doesn't PE account for margin though? Yeah. I mean, the way I don't try to look at it at both of them together. I try to look at them separately. So the way I like to go is give me my PEG ratio. What's sort of the growth per the valuation that I'm getting, right? And then how efficient is the company as a separate question, right? Because the higher margins a company has, likely the more of a competitive advantage they have in the market. So if you could get a company with a great valuation with higher margin, it's a sign that the company's probably doing things really well where their customers love them, right? I mean, Tesla, for an automotive manufacturer, really high margins. Especially gross margins, net margins will come. But even in the auto space, very, very high gross margins, and extremely high growth rate. This is good. So you get this wonderful marriage here. Another one like that, it's a great question, by the way. Another one like that is Enphase. So I really like Enphase. I had a dream that somebody wanted to start an Enphase competitor with me, and that we were going to get into the business of like manufacturing batteries and selling them because there's such a shortage of them right now. It actually sounds like a great idea. We got to quantum scape it up over here. but maybe in the future. So Enphase is a company that, they have a net margin of somewhere kind of closer to like the AMD level, somewhere around that 24%. But for actually making inverters and like battery packs in that field, it's actually pretty decent. And they're growing, anywhere between probably at an average of about 25 to 30% over the next 4 years. They're at $161 right now, a little pricey, divided by 352, selling for about 45 times. It's one of the reasons I don't own them right now, and I think people are going to spend less on their homes. But I really like them in terms of their margin competitiveness, just not the valuation right now. See you in the metaverse. Swedish. What is this? Oh, yeah. So there was a flash crash this morning for about 5 minutes. One of the indices crashed like 5%, or I'm sorry, 8% in Sweden, and then rebounded to where I think it was only down like 1% towards the end of the day, their trading day. Yeah. Kind of fascinating to see people buy the dip on, like T-Doc over here. Again, it's not a company that I would touch with a 10-foot pole. I think it's a plague of a company, but whatever. Let's look at Wayfair. Okay, this is not a horrible company at all. People are going to be spending less on like furniture and crap at home and stuff right now, and so they're not actually expected to grow in 2022 much, like 1.5%. Then maybe back to 12%, but also negative earnings. I can't touch it. Greetings from Argentina. Thinking about buying one of your courses. How do I contact you? Having trouble taking money out of my country to pay. The best thing probably would be to, and we're a little behind on emails, but we should be caught up to emails today. But probably the best thing you could do is you could just like pay in like crypto, like BTC or something like that. And we could just like email you a wallet or something like that. And then get back to you. But just a heads up, like if you're waiting for a reply in email, it's going to be a little delayed right now because I had 2 people working emails and now I have nobody working emails, but I've reassigned someone to help me, and I'm in there working on it too, but it's a lot. So we'll get there. Anyway, I have to say, okay, we got numbers coming out in about 90 seconds. So 90 seconds for numbers here. Coming out, so I'm really excited about that. Ooh, ChargePoint would be interesting to look at. Yeah, so I'm really excited. I mean, over the last a week ago today, I would have never imagined where I would be today, or just a week later. Like, I mean, some of the partnerships, a massive partnership that we've created as part of our launch, hiring plans, office plans, expansion plans. I mean, it's like we're gonna have like a huge like Meet Kevin 2.0 in the next like 6 months, and then we're not gonna change the content. Obviously, it's still gonna have similar content, but just in terms of like next level business stuff, it's gonna be really, really cool. If you want to stay tuned for updates on that, by the way, make sure you go to metkevin.com/Series A. Drop your email in there, metkevin.com/Series A. Make sure to check the box if you're an accredited investor or not. Take a little range in terms of what you'd ever consider potentially investing in the future. But anyway, no emails have gone out on the Series A thing yet. So if you're like, I put my email in, I haven't heard anything. Yeah, because I haven't said anything there yet. Just saying. Stay tuned. Okay. We are 10 seconds away from numbers. Construction spending, ISM manufacturing, prices paid, everything. Blah, 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 blah. Let's see how the QQ. Okay, here we go. Prices paid. It's a miss. Yes, that's really good. The survey was 87.4. It came in at 84.6. That's a miss on prices paid. Yes. New orders shrunk a little bit. The survey was for 54.1. We came in at 53.5. ISM employment came in, or the expectation was 55, came in at 50.9. That's almost in that contraction area. You get a number under 50. I think they call these like the regression models. You get a number under 50, you get contraction. Construction spending month over month. The expectation was 0.8% month over month, which is like 9.6% year over year or annualized, right? Came in at 0.1%. You're about to see CNBC. I guarantee you, they're gonna pop it up, and we're gonna have the breaking news here in just a sec. I guess not. They're gonna do David Faber. Really? Anyway, that's insane. But we beat them to it by miles here. But that's pretty crazy. That price is paid number, coming in at a good miss of almost 3 points there is really good, and that hopefully reiterates. Or gives us a little bit of optimism. There you go for inflation. Let's see if they're reporting.
Citing antitrust concerns, shares of Spirit down.
Oh, they just have it as a little bar on the bottom now. Anyway, so that's really, really cool. Okay, good. Happy about that. So let's see what else do we have here. Tesla now. Look at Tesla get rejected over here. Tesla. Oh, Tesla, la Tesla, la Tesla. Some people say it's overvalued. I say it's a steal. That's what makes it fun. The day everybody thinks Tesla is a stock to own is the day I sell. The day my father-in-law wants to buy a Tesla is the day I sell. I need people to hate it, because that's how I know it hasn't reached its potential. That's great. Okay. What's another one? Let's do. This is kind of fun. I like doing some of these numbers with y'all. Let's do Visa. Visa. I don't know if you checked the wrong box. Just fill it out again. What do I know? All right. Financial analysis. Just put like a different email. Okay, so Visa takes like 53% of the bottom line. Things growing probably at like 14% a year. Their EPS is expected to be divided by $7.18, puts them at about 29 times. Man, that's also a little pricey. And for growth of about 13%. I'm telling you, out of all of these, the ones with the valuations that actually look great compared to growth. Valuation compared to growth, right? So low peg. Tesla, Etsy, and I don't know why EXPI is trading for such a low peg. I mean, I have no idea. I'm going to look a little bit more at these because that's just insane. Pinterest has a low peg, but I'm also worried about them. Let me look at Activision. It'd be fun to look at. All my charts look like Biden's approval ratings. Oh, that's a tweet. That's a tweet. Should we tweet that? That's hilarious, actually. I don't know. Okay. So Activision, $3. $3. 78 divided by $3. Selling for about 26 times. And they're growing. Yeah, but the Call of Duty miss this year was a big problem. Very lumpy growth. Mastercard and Amex. Sure, let's just do a quick look there. You know, I'm always so partial to Visa because they're just like the big dog, right? But Mastercard's growing at around 17%. That's pretty decent. They have EPS of about 10. See, but you're also paying 35 times for that. You know, it's probably because you got some flight to safety in Mastercard, Visa, and these things, just because they are a very high margin business. They're not going to go bankrupt, right? Let's try Amex. How is American Express AXP? That's so lame. They should have gotten the ticker symbol Amex. That would have been dope. Well. Yeah, American Express. Okay. All right, so EPS of $9. Oh, see, this one's better. 173 divided by 9.70. There might be a reason, though. Selling for 17 times, and they're growing at about, 13, 14%. Just at a very quick glance, American Express has the best out of all of those. I'll put a little asterisk on that one. to look into that. So I want to look into American Express and see what the heck is going on with EXPI, because that's insane. Excuse me. All good, Stefano. All right. A little taste, just a little. We're gonna do one thing that's gonna make lots of money. I hope. No guarantees. And then when that makes lots of money, we're gonna use that la money to do other things that maybe, with less of a guarantee, make big money. But we're gonna start with the safest. Ever looked into Win? Yeah. You know, I don't know. Let's see. Win. Wow, still negative cash flow. Come on, man. I mean, I think they're the best hotel on the strip. But, wow, still losing money. What about MGM? MGM. And then let's look at what the suits are saying. The market's turning red again. So MGM, 50 cents. This is actually also, the earnings are quite terrible. Although they report earnings today. Ooh. I guess we'll find out. All right. So, suits. What do the suits say? Expectations for higher rates and Amazon's plunge weigh on stocks. The S&P swung from losses to small gains in early trading, with eyes on the growing possibility of Treasury yields rising above 3% for the first time since 2018. China's lockdowns and worry about the war in Ukraine are also adding to anxiety. Tech stocks were initially down, with Amazon extending last week's historic rut. On the other hand, there's a bright spot for chip companies. The semiconductor index is jumping after an earnings beat and better than expected forecast. Credits, cruelest April on record, left nowhere to hide. Investment grade U.S. credit had its worst April and nowhere to hide after its longest losing streak since 1994. Oopsies. So bonds getting murked. Equity markets cry Mayday. Bah! What a knee slapper. Oh gosh. Did Warren Buffett kill? Did he finally put the nail in the coffin on Hood? No, it's actually green today. Actually green. I bet Warren Buffett listens to every one of our Market Open live streams. All right. Well, if you do, shout out to you, Warren. We'd love to have you on the channel. Anyway. All right. Well, I mean, this is pretty entertaining. So, yeah, if you want to, if you want joint therapy, make sure to use the coupon code Back to the Moon link below, so we could hope that we go back to the moon soon together, in our joint delusions. But in the meantime, while we're jointly delusional, you can learn about long-term building wealth in stocks or in real estate, which real estate I think has got some sweet opportunities. But honestly, with how low stocks have gone, yeah, there's some really sweet opportunities here as well. So very excited about those. But that doesn't mean there won't be some short-term anxiety. Anywho, thanks so much for being here, folks. I still have to finish up this office here. It's getting really close. It's getting much closer. See, I have this new angle now. I actually got a few angles. I'll give you a quick little cheat. All right, so I'm working this angle. Here's my old angle, but there's just stuff in the background, right? But this is the one that we had been using, so you get a little bit more like the close-up. This one, I put some stuff on the monitors and stuff. Let me see what I have in this. Is this one on? No, that one's not doing anything yet. I figure that one out. And then I actually have a fourth angle that I'm adding, so it's kind of fun. But anyway, so things to do.